Hello, everybody, and welcome back to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy, such as the deferred sales trust, is the best way to exit highly appreciated assets tax deferred so you can create, preserve, and grow your wealth. I'm your co-host, Pearson York, filling in for Brett Schwartz. And each episode, I'm joined by some of the best wealth, business, real estate, and leadership individuals in the world to share ideas, deals, stories, and inspirations. So together we can make complex tax deferral strategies simple and passive income plans achievable. As always, we're streaming on the YouTube channel and the Facebook channels, capitalgainstaxsolutions.com/YouTube. Go ahead, check that out. Please rate, review, subscribe, like, and I'm excited about our next guest. He was actually on about a year ago, and we've had him back because he is too brilliant. His resume is way too long to go over all the stuff right now, but just a little teaser. Stonier diplomat at ABA Graduate School of Banking, University of Pennsylvania, leadership certificate in the Wharton School of University of Pennsylvania. He's an entrepreneur and innovator, and he's got a company that he's founded called Investment Science. And so please welcome Michael Kelly. Michael, how you doing, man?
Great. Thanks for having me on again.
Yeah, absolutely, man. Absolutely. So, Michael, tell me we already did the show. So if you guys want to listen to that, you can go back and listen to it. But for those of you who are new or who haven't heard your show, just give a brief 2-minute synopsis of who you are and what you do.
Oh, is that for me or is that someone on the? Oh, it's for me. So I'm Michael Kelly. I'm the founder of Investment Science, and our management consulting practice. We stay on top of the latest trends of banking and technology. So, for example, like no-code programming, get an app up and running very quickly, sales automation, or your company may not know what to do financially. You could even be a startup. You raise $2 million. Are you going to burn through that cash? You want some treasury management. Regarding consumer services, we have a product that's just about ready for market. We only have private investors now, but we're not charging any fees. You can reach out to us directly regarding that service. And that's more talking about, financial panics, right? Keep custody of your assets. It's your bank account. Things don't correlate together. Audits of returns. Are these returns even real? And we're not trading against you, right? So a lot of these platforms like Robinhood, when you buy or sell a security, there's a large fund behind them, either pushing the price down or pushing it up the other way, which we feel isn't fair to consumers, and we would more want it to be anonymous trading for you.
So you're really kind of targeting the retail investor on a similar platform like a Robinhood or a Webull type thing. Is that what you're building, or is it different?
Well, there's different phases, and I actually had to have assistance in graduate school at Indiana just on the messaging of like who you're focusing on in the beginning. And we have about 50K just of retail investors now. We're actually going to be launching that live pretty shortly. So yeah, phase one would be retail. Phase two, we would more talk about even venture capitalists. Many of them could have more deals because they're not hedging their losses. In early stage investing, they're often losing capital 7 to 9 out of 10 times. We could securitize that. Or we could talk about startups, right?
Yeah.
People don't know they could issue their own bonds at 85% of net income, or launch your own ETF at about 100,000 a year. So that platform, right, it's really finding investment opportunities, managed accounts, reasonable fees with secure controls so that you're not worried about another Voyager, another Madoff, a company trading against you. And you're just like, look, after what I just saw with this COVID thing and all this volatility, I just want somebody to deal with it and use advanced analytics and knows what they're doing.
Yeah, that makes a lot of sense. So what's the number one secret to developing a platform like this? Like, what are you having to focus on more than anything else?
I struggled when I was like 19 building it out. I'm 33 now. So I think if anybody's trying to launch a business, just write down a thesis, and you may not have the skill set, but just keep trying. So it took me quite a long time, but then as I kept trying, started over 3 times, I just built it out in Python, and now programming's easier than ever with software like Retool. No code programming, drag and drop to build out prototypes. And then if you need to raise capital, it's really getting your messaging down, or using sales automation techniques like Walaxy, mass LinkedIn IMing and mass emailing, but just be careful of can't spam act laws, that you're not spamming people,
Yeah.
and tell you to back off, you back off.
Interesting. Okay. So just don't give up. Sounds like one of your goals is perseverance, or one of your strengths is perseverance.
Yeah, just keep your eye on the prize, and keep going, because eventually things are going to click together, and you're going to have so many conversations with different people. Like, a lot of people don't know, and I didn't learn this until studying entrepreneurship at Indiana. You're supposed to do about 500 surveys before you even launch a product. A lot of people don't do that.
Definitely not.
But if you do it, right, you get all these personas, right, of like, okay. And that's how we built out our platform. It's like, I worked in the business. I saw some of the things I didn't like that are going on.
Yeah.
And I'm like, you write out challenges. Okay. Like, people were stressed out in 2009 from the financial crisis. Most individuals and companies didn't like what happened in COVID. And people are stressed out from inflation now. And it's getting the messaging down, which I've gotten better at over the years. But coming from a software engineering background, I struggled in my mid-20s.
Yeah.
So it's just kind of be holistic. And if you're not good at something, find someone who has that skill set.
Yep. Awesome. Okay. How is today's landscaping with the economics in the markets affecting your guys' business?
I think it actually helps, right? Because if you look at Google Trends data, anytime a market's panicking, the searches for wealth management shoot up, right? So many people want financial services when the market's not doing too well, or there's a lot of volatility. Some other things that have helped us with this market, just from COVID, of a lot of remote work, we've had more spare time. So we have a lot of search engine optimization. We show up first for certain key terms. So now we have some decision makers at companies booking meetings with us directly, rather than having to go through third parties, which is also useful. So to summarize, the market today, you have a lot of opportunity. You're working remotely. You have no code programming. You have YouTube videos, right? You could search for almost any topic and learn it quite well within a reasonable amount of time. And that's how I was able to even be a professor of data science at Baruch. I self-taught myself data science, and then you become an expert in some fields, and people will pay for your opinions after a while.
It's crazy. I call it YouTube University because it's you learn so much. It's crazy.
Yeah, and I try to tell people, don't just learn, but action. Yeah, I have some friends,
Yeah.
they read every book, but they just keep reading. Action, do something with it.
How do you feel about like the university versus like self-learning in today's just access to information, and like where do you think it's going with like schools and colleges and that type of thing? You've got a lot of degrees and stuff like that, so obviously you like the schools, but
Um, I have met people that have not even finished college, and I say it's not for everyone, right? There's a
yeah,
lot of opportunity in the military, or even doing construction. There's labor shortages in all these areas, right? If you do a construction project, it's a miracle people just show up. So I just say, if you just do the work in some of these fields, you could have quite a nice life. But regarding education, it is getting more and more expensive. I think if you do go, you need to really know what your exit plan is, right? So, or how much it's going to cost, or
yeah,
what you're going to do after. But you could self-learn things, right? There's some of the best programmers. Some of these people didn't even, I mean, they might have graduated high school, but I've met some brilliant engineers that code better than me, even with all the schooling I have. So it's not for everyone, but if you can do it or want to do it, it's definitely uh, beneficial.
Yeah.
I would just say it helped my soft skills just teaching college for a year, or just how you write and speak. Because if you study computers, you're writing code all day for 10 years, you struggle to write a sentence. And you go back to graduate school, you're writing all these white papers. So just make yourself well-rounded. And you can do it through YouTube too. I self-taught myself data science, not really through YouTube. I learned it in 2009 reading very complicated white papers, but I think it's easier today. You go to Wikipedia, you go to YouTube. There's meetups you can go to. Right? I've known people who've broken into industries just by going to networking events.
Yep. Interesting. Okay. All right. On the last show, you kind of talked a little bit, about some tax strategy and whatnot, and kind of like where you were on this show. It's a totally different landscape. It's a totally different, market and whatnot. How has your company adapted at all to like what's going on? Have you guys changed your business plan at all, based upon what's going on out there?
I mean, we have CPAs and attorneys that handle tax matters, but on my side, it's been pretty straightforward for our consulting practice. It's an LLC, tax as an S corp, right? I learned this 10 years ago talking to an accountant. Any revenue on your business account, right? Pay yourself a wage of about 30K. All the other cash in there, if you're going to pay yourself out, do a distribution, which is a flat 15% federal tax. But I tell people a lot of like CPAs are almost like attorneys. They're staying on top of tax law.
Yeah.
I mean, trusts. There's a million things you could do. There used to be a lot of action with the SPACs because of taxes. I know VCs like C corps because of their tax situation, tax exempt status. I even think the company that administers the SAT, they're tax exempt, if I'm not mistaken.
Yeah, there's definitely a bunch of different, things you can do depending upon your structure, your organization, and all sorts of different things. I think what I was kind of asking though is last time you guys were, talking about that on this particular show. I kind of want to dive into a little bit more about um, your specific business model, right? And I think there's a lot of fear out there today on what's going on, right? Like we were talking before the show, they printed 40% of all the dollars in circulation in the last, like, what, 2 years? I guess 3 years now, something stupid like that, right? Now they're trying to fight this inflation, right? The UK just turned their printer press back on because of their bond markets going, in the toilet. So there's a lot of uncertainty. The housing market is trying to go down, but the lack of supply is kind of stabilizing a little bit, but it's still crazy high, like, and with the inflation and people can't afford this stuff. And you mentioned a lot of people are now searching for your kind of services and whatnot. How are you navigating this economic turmoil that we're kind of globally dealing with right now?
Well, we have an edge just because think of it like a black box. It took us years, even a bunch of PhDs cycling in and out of the company, just first selecting the proper data science model, right? But then having the data to conduct it. So, for example, we get signals of the past year or the past 3 years, 6 months, 1 month. We have a trend of the industry. And then we take correlations to the next level because a lot of financial firms assume a normal distribution, right? That's why we had part of the reason why we had the 2009 financial crisis. They were selling mortgage-backed securities and said, well, this thing's normally distributed, right? And we did all the number crunching on 15,000 listed securities, and the distributions change every year, right? And then these distributions mean there's certain amount of volatility. There's advanced financial modeling or just basic stuff that banks do in an enterprise like GARCH and ARIMA modeling, right? You could predict next day's volatility, but it's proper risk management, right? Just 5% in options or futures. and making sure everything in the portfolio is not correlated. So, I mean, right now, a lot of our things are showing everything crashes together.
Yeah.
So, a lot of the big companies go after large cap if you're talking about stocks, right? But if you do nano cap or small cap, they're
Okay.
not really, and that's if you talk to even like people who do commercial real estate, like Peter Harris. He's like, I don't even go with the big boys. I just go at my local community. And that's kind of the same with a lot of people. Unless you have a ton of capital,
Right.
just look at what's going on around you, right? With the rising dollar, a lot of money flowed into utility companies because the whole market was crashing. But it's hedging, right? You learn, go on YouTube, learn about options, right? Derivative instruments. We derive our value off of something else. And a lot of companies explode over that because they put too much in. But if you just do a 5%, if you lose your full 5% and your whole other portfolio shoots up 95%, you're still up. Your
Right.
whole portfolio tanks, right? So you could do products that benefit as the dollar rises. Right? You could technically go long the dollar, synthetic, if that's what you want to do.
Yeah.
It really depends on an individual situation, including taxes, like that your podcast is very strong with.
So where are you guys putting money right now?
Well, the past year, I mean, like I said, November, we were short crypto. Because I was talking to venture capitalists in grad school, and I kept hearing, if it's not crypto, I'm not doing it. So no, it sounds like a bubble to me. Had a Uber driver tell me, did you hear about crypto? So if everybody's talking about it, you might want to do the opposite.
Yeah.
But you
Smart.
can also get burned by that too, because there's trends and everyone's buying. So you have to kind of do like, look at resistance levels. We're constructing a new portfolio now. We're still in conversations, Dr. Weinbach and I, but we tend to use our models to try to have 25 investments, and we'll put 5% in options. He has a weird strategy where he finds price movements in the first 15 minutes that have no news, right? So let's just say something shut down right now or tomorrow morning. Is there any news? Does this even make sense? So you can find a good price point to get in. I'm bullish on the dollar.
Okay.
Because rates are rising. Oil more sideways, probably slight upwards. You have the war still going on, unfortunately, in Russia, right? Supply chain issues. But oil tends to go down when rates go up, but then more people working from home, consuming oil, driving around more. But then it's also offset by larger companies and less shipping because of supply chain issues. So raw materials doesn't do well, but I mean, we saw consumer discretionary the past 2 years up until today just keep crashing, right? So you can make money in a down market. You short certain sectors.
Yeah, definitely. So is that what you guys are? I mean, is that what you guys are doing right now? Are you guys trying to short certain things and like just kind of go long on like really conservative investments? Like, what is the investment strategy for you guys right now, given what's going on?
Yeah, 5% in options, right? So let's say we're
Calls
long.
or puts or both?
It would be dependent on the whole portfolio. So like, let's say we have 25 investments.
Okay.
We might do 60% short, 40% long, and then 5% potentially long to offset the shorts in options, or half and half. So our investment methodology really boils down to, you have $100 to invest. A dollar could fall into a different financial product, time frame, and strategy. Some could be high frequency, some could be longer term, shorter term, on things that don't correlate. So I have the system do most of the work, and then we manually validate it. Again, it's more consumer discretionary, right? So like anything that's discretionary spending has been kind of more or less going down because of the looming recession. People tend to spend less. Products that link to a rising dollar that do well, we're long, and it's mostly just these standout companies. We find outliers. So if you were to drill down to a specific industry, like let's say financials, we could find the top overperformer and the top underperformer.
And you're
Right?
shorting the overperformer and you're calling the underperformer, and
It
is it as
just
simple as that, or
well, we're still building out the portfolio, right? But as we're
yeah.
building it out, we have to kind of link it all together. Are these things correlated? What's the statistical distribution? Right? A lot of companies still assume a normal because you talk about betas. What's a prerequisite for a beta? And a lot of financial firms use it, a normal distribution. And we just told you a lot of these. So look at all the assumptions, and we remove those assumptions and let the data tell us what to do.
And no one, it's like, and no one else is kind of doing that right now. It's just a lot of like,
Well, a lot of the market, at least on the equity side, I haven't been on top of it as much. It's like 85% plus is electronic trading,
okay,
right? So, and I've heard that before. Like, hasn't this been tried or done? I'm like, well, custody's been around for how long? Most companies don't do that mandatory. Right? We would just say, never send us a check, ever. It's your money. Open an account. It's your account. Pull your money at any time. We're not locking up your money.
yeah,
Audits, right? Real-time audits of trades by third parties, right? That we're not waiting post-trade, real time. Did you perform what you said you would? We're not trading against you. Like on Robinhood, someone's trading against you, right? We would have an anonymous, right? You open your own account, any trade submitted, they don't even know who you are. Through interactive brokers. And then we find non-correlated returns, right? So I could talk about like last year what did well, and we're winding out of that. But I was short crypto and long oil. Like we bought oil and oil went negative.
when they paid you to buy it.
Yeah, like weird. Like so, just look at weird things that are happening. Like that's weird, right?
Yeah,
So and it's like it's not going to stay negative forever. So you look at crypto a year ago. I think it was Bitcoin was at like 60 or 65K.
yeah, it's ridiculous.
Yeah, but it's not backed by anything. First off, and it's just this thing. Even institutional investors. I heard venture capitalists. I kept talking to them. If it's not crypto, and I do fintech, I'm not doing it. And I said, unfortunately, we could agree to disagree, but I think you're in for a tough time in the next year.
Yeah,
Like, have a follow-up conversation in 6 months. When it tanked, I didn't hear from them. So
did you,
because that's
so
what our software was telling us too. It's like, all right, price, because it's just looking at it removes emotion, right? Prices
right,
can over exhaust, under exhaust. It's like at a double top, right? And you have to look at everybody keeps talking about it. It's never reached this level higher ever. And you have rising interest rates, right? Which is bad for crypto. So logically speaking, it should go down. This was a year ago, right? And then the oil, we bought it when it went negative. So like I said, most of that one portfolio didn't do well, but we did proper hedging, right? 5% was short an ETF that represented crypto. All the other asset classes, like we said, most of them moved together because of ETFs.
right.
Those are long, 5% short, and oil shot up, right? So because oil shot up and crypto crashed, you're still up 30 to 40%. You look at the same thing now, it's like you have, the rising dollar, so products that link to that, short, consumer, discretionary, and if we just go through it, real estate's not doing well, even though, like you said, but there's downward pressure on real estate investment trusts. Right? When rising interest rates, it hurts their capital. They have to borrow at a higher rate.
Yeah, it's ridiculous.
So you just list out things like, what are people saying? What does the data tell me in front of me? Are we is this price level sustainable? Can I get in? Can I get out? Do I insure no more than 2 to 5% in each position, right? Because I talk to a lot of retail people. They're like, well, I did better than you. It's like, and you put every dollar in crypto. So like on an institutional level, that's not good, right? That one thing goes to zero, you're wiped out completely. There's risk, right?
Yeah. So you're really big on managing your risk, making sure that you're diversified, making sure that you are just listening to the data and
I mean, diversification doesn't work as well as it used to, right? There's a lot of people that think gold works well. I think actually crypto outperformed gold with inflation and pricing. And we do the proper diversification where we're looking at the proper data elements, the proper way to measure correlation, the proper statistical distribution. And we can also mine all the data of like what's going on all the social media sites and what people are saying about it. And do we agree or disagree? We could look at some of the government reports of institutional short interest. How many companies are taking a negative position against this? And then we apply data science models of predictive analytics. So the system only has to be right 58% of the time. Right.
So really, your model hasn't changed at all. It's really just the investments that you're going to be putting your dollars into, and that you're just going to let the market tell you what's pretty much just out of whack in any situation, whether it's positive or negative, and you're just making sure you're protecting your downside.
Yeah, and a lot of, I mean, you look at BlackRock's Russia fund went under. So everybody says, don't all these, like, remember you said before, don't all these companies have it figured out? It hasn't been tried before. I'm like, you would think so, but no. Not with all these elements we're speaking about, very basic, proper risk management.
How is that possible?
I think these companies are just so big. So I'm not going to say like when I name these companies, I'm not saying every single person there is doing something wrong. It's just like I think they're just too big. Again,
So
I even got off the phone with Google, right? I'm struggling just with my email servers. I'm like, you guys used to be good 10 years ago.
you actually got a hold of Google?
No, it's a support ticket.
I was going to say, I have never heard of someone being able to talk to them.
Well, that's another problem, right? All these companies, it's hard to get people on the phone. Like, I like to talk to people on the phone. And then on the optimistic side, they're like, well, with the millennials, they like to text, so we do robots. It's like, no, you're just trying to save money.
Yeah.
Get it. There shouldn't be, I go to these banking conferences. I said, if you call a bank, there shouldn't be a 10-minute hold time. You guys can print money. You can borrow money from the Fed. Real time, they pick up the phone.
Right.
Just little things like that. Or you look at, we have in our business plan to acquire an existing bank, right? If we had a yield on a checking account of 5%, we make the next credit card rate 5%. Why did credit card rates have to be 18% or 20 or 30? Hopefully, 5%.
I want a 5% credit card. You get a 5% credit card, sign me up. I'll be the first customer.
That's what we're saying. We're trying to just write out every problem people have with financial institutions, right? From all of our surveys, and they're like, well, I don't know if it's a scam. I don't like losing money. I think banks are charging too many fees. Credit card rates are too high. So we're making it consumer centered, and we're looking at risk. And a lot of these consumers don't know it. I'm on a Robinhood account. A hedge fund's trading against me. That's not
Yeah,
good.
I did not know that.
A lot of people, there's a lot of things that go on because even to get the market data for Robinhood, you're looking at roughly 500,000 a year just for data feeds. So probably anywhere from $200 to $500 per user. So they were being really shady about the whole thing in the beginning of how they actually made money. Right? Everyone thinks it's free. It's like, no, they'd be out of business. They're running a business, 500 per year. So and there's actually theories that if the New York Stock Exchange imposes best execution, right? Because there's like a little bit of a markup on that price.
Yeah.
Ask spread. That's not the best price. Right? So there's a lot of controversy around them, but they did do some good things with commission-free trading than all the other brokers at the lower commission. So I don't like to be overly negative with companies, but you just have to list out challenges and make it consumer-centered. And if people see that you're looking out for their best interest, you don't even have to say, we're not all these bad things. but these bad things go on. Here's what we're doing to protect you.
Yeah.
That's our differentiator.
I love it. It's awesome. All right, cool. Well, we're coming up on a half hour here, so I got to get you out of here because I don't want to take up too much of your time. But
Yeah.
Do you have any parting words?
Well, first off, thanks for having me on again. I appreciate your time, and just to all the listeners out there, I wish you all economic prosperity. It was nice meeting you, and keep in touch.
Awesome. And how can people get in touch with you?
Go to investment, one word, scy.com. That's our management consulting practice, but we would also tie you to our consumer services practice when we're ready, which we're launching in a couple weeks.
Awesome. So SCY.com.
Yeah.
Go find Michael Kelly. He said this himself. He'd pick up the phone and talk to you. So
I will.
So go out there and give him a call. And if you guys are interested in learning more about capital gains tax solutions, go to capitalgainstaxsolutions.com. We didn't get into the deferred sales trust here on this episode because we did it on the last one, but we'll leave that one for the next people. If this is your first time listening, the deferred sales trust is an awesome tax strategy for capital gains tax. It has no time constraints and no like-kind constraints like you would have with a 1031 exchange. So if you're selling any highly appreciated asset, it can be a stock, could be a business, could be crypto. You didn't sell that crypto when it was 65, now it's 20. Anything like that, you can defer all the tax, pay off all the debt, and reinvest the funds in whatever you want using strategies like Michael Kelly's over here with the investment side. So that's who we are and what we do. If that's interesting, go to capitalgainstaxsolutions.com for more information. Any parting words?
Good luck with your capital gains tax solutions, and
Thanks.
Stay in touch as well.
Yeah, absolutely, guys. And thank you so much for listening to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy. Using proven tax deferral strategies such as the deferred sales trust, using wise investment strategies like data-driven investments and diversification that's accurate and non-emotional with common sense behind it. It's the best way to create, preserve, and grow your wealth. So please rate, review, subscribe, guys, and we'll see you on the next one. Thanks so much. Bye-bye.